retained earnings statement, right? And what is the formula for retained earning? Beginning plus net income minus dividend. Answer is ending retained earning balance. Simple. So what is the company's financial position at the year end? So here, everyone, please look at the PPT here. At the year, it means on a specific date, what is the financial position or financial evaluation or financial worth of the business? You can find out through balance sheet, right? And what is the balance sheet formula? Assets is equal to liabilities plus owner's equity. But remember that the tricky point here is the balance sheet shows you the financial position on a specific date. What is the worth of the business on 10th of December or on 31st of December or 1st January or 29th January? It won't tell you about what is the financial position on 30th of December. No, because financial position of the company shown by balance sheet would be on one single day. That's why I stress the word at. We also call this snapshot of the business. Snapshot, a picture of the business. So balance sheet only tells you about the picture of the business on a specific date. That's it. It won't tell you what's going on during the year. No. During the year, the performance is going to be checked through income statement, how well company performed, what is the expenses, what is the net income, how much company distributed to the owners, dividend, right? How much interest company paid, how much salary company paid during the year, right? Good. So that was just a tricky point here. And then how much cash did the company generate and spend during the year? We can find out through cash flow statement. Now, how we can find out the cash flow statement? Formula, simple. Cash flow from operation plus cash flow from investment plus cash flow from financing. If our answer is positive, we can say that cash is increased. If the answer is negative, then we say that we need loan. Cash is decreased. Right? Now, look at me. Now the question that should be in your mind, why there is a need of this cash flow statement? We have profit statement, right? Income statement, we know how much profit we calculated, that's it. But why we need this cash flow statement? So the answer is cash and profit both are not equal. And during time to time, when we do some other questions, you will find out that cash is different, profit is different. Strange, right? Because at this level, at the beginning level, you understand that, okay, cash and profit is the same. But in business, cash and profits are not same. Because in business, some expenses are non-cash. There is no actual cash behind, or you don't have to pay from your pocket the actual cash. But when we talk about cash expenses, it means you are paying from your pocket. Cash is actually going out from your pocket. Right? So just at this moment, just remember that cash and profit both are not equal. So that's why we want to find out that cash flow statement, what is happening during the year with the cash, right? So that's why we need a fourth statement, cash flow statement. Okay, from time to time, we further share some lights on this concept, cash and profit. So at this level, just remember that cash and profit both are not equal. So that doesn't mean if you have a profit of 10,000, it means in your bank account, exactly 10,000 is there. No, right? It doesn't mean that. Okay, so what is the data flow? So is there any hierarchy whose statement should be made first? Yes. First of all, we have to make income statement. From income statement, what we find out? Net income, right? And then we make retained earning because net income is going to be used in retained earning. What is the formula for retained earning? Beginning retained earning plus net income. So where we can find out the net income? Through income statement. So first you need to make income statement and then retained earning statement. And then you make balance sheet. Why? Because under honor equity, you need to mention retained earnings. So retained earning is coming from retained earning statement. So there is a hierarchical flow here. And then you make at last cash flow statement or statement of cash flows. Okay, here we go. First, you need to make income statement and then statement of retained earnings and then balance sheet and then cash flow statement. There is a data flow, there is a hierarchy here. Who's gonna be made next? Yes, right? Starts from income statement and then statement of retained earning and then balance sheet and then cash flow statement, right? So let's explore what's happening during the year. So what's happening during the year? Which statement gonna tell us? Income statement, right? So let's talk about the income statement. So income statement comprises of all the business operations. So what are the business operations? Business operations are buying and selling. That is the core business operation, right? Because, for example, if I am here in a business of clothing, right? So my business operation is buy a raw clothing and then stitch it into like coats, pants, shirts, and then sell it. So that is my core business. So if I sell my laptop, is it my core business operation? No, because I'm making only suiting, right? Clothings, right? So that's why. So business operations, like your normal buying and selling. So that's why the other name of income statement is statement of operations. So it reports revenues and gains. Revenues, the core product you are selling. What are the gains? Sometimes furniture is too old, you need to replace that, right? You can sell it. No law forbids you to sell, but that is not your business operation. It's one-time gain. Or you are selling a piece of land. You bought it at $30,000 and now you are selling it after 5 years, you are selling at 60,000. So you have a gain of 30,000. So that is just one-time activity. Or you are, for example, Brad Pitt come to your outlet and he tried this coat. Now normally this coat is for like just $100, but since the Brad Pitt want this coat, what happened? Only this coat is only for $1,000. That's it. Other coats same, they are $100, but this coat is for $1,000. So it means you are selling way above to cash out that goodwill because Brad Pitt has this coat. That's it. So that is also a gain, right? Similarly, expenses and losses. You bought the computer for $3,000 and now after you want to replace it with new technology and you are selling it at, for example, $1,000, right? So the market value, you said that the market value going to be 1,500, but you have to sell it at 1,000. So it means your expectation is not according to the market. You lost 500 due to your expectations. So that is something the loss. We do have different kind of examples in our coming lectures and coming slide. So don't just get worried about this gain and losses, right? But income statement reports revenues and expenses, right? So it also report at the bottom of the line, like revenue minus expenses, it tells you net income. If the answer is positive, it's net income. If answer is negative, it is net loss. Understand? Pino, Harry, Ella, Marilyn, Nam, Anthony. Understand?
Understand, sir.
Good. If you have any question, you can always stop me. Sorry, I don't understand. Please repeat this, okay? So here is the typical income statement of the business. Here we go. So we have Gap Incorporation. We already know that. What is Gap? It is selling clothing, kids clothing, female clothing, male clothing, like that. So you see fiscal year to 2011, fiscal year 2010. So it's showing you 2 years income statement, right? So don't just get worried about all this stuff. This is just for comparison. You can also make it for 1 year. You can also make it for 2 year, 3 year, 4 year for your comparison, right? If you want to compare it, you can also put the numbers here, 2009, right? So you see net sales, cost of goods sold and occupancy expenses, operating expenses, interest, income taxes, and all those stuff, right? So these are total revenues. So why there is a word net here? Why not just revenues? Any idea here? Anyone want to contribute here? Why there is a net here? Because some customer, they return the sales as well. I like this code, I wear it, and then I find out that it's not comfortable. Because company has 5 days return policy, I can go and just change it or just return it. So that's why there's a word net here, right? And cost of goods sold, okay, the raw material, the clothing cost, the stitching cost, and so all those stuff, these are expenses, so you less it. Operating expenses like electricity bills, rent outlet, and all those stuff, right? Interest expenses, like you ask loan from creditors, outsiders, and you are paying interest, that is your cost. You're lessening it. And then taxes, of course, are your biggest expenses. And then at the end, total expenses. So total expenses are the addition of all these. So how we write it down? So many students, they are confused. What are these? And what are these? Right? So these are just how we represent it. So net sales is totally different head because it only has one thing, revenues. If we have sale return, then we can just write it down, sale return as well. And then final figure, we write it down in like this. And now expenses, we have more than one expenses. So you write it down expenses, add all these. And total expenses are the addition of below this underlined stuff. So 9275 plus 3836, 69536, total 13716. So this is the total expenses, right? So this is just a presentation, how you present it, so that you know that if you see the income statement, you find out how much is the total expense. Rather, you take out your phone, open the calculator, and then try to add all these stuff. So you have a one figure here. Sales minus revenue, sales are like this, expenses are like this, and this is the net income. And you see a double line here, right? Double line here. It's because from here now statement is ended, right? You see a single underline here, a single underline here, but here you find out double. It means